Welcome to Facts USA and World. Today, we're diving into one of the most misunderstood topics in global finance, offshore companies, often called offshores. For many people, the word offshore sounds like something illegal. Hidden islands, secret bank accounts, shady billionaires avoiding taxes. But the truth is far more simple and far more interesting. Offshores are not magic. They are not criminal by default. They are financial tools that allow companies and wealthy individuals to pay fewer taxes, protect their money, and operate internationally with less friction. Today, you'll see exactly how offshores work, why governments tolerate them, and why the world's biggest corporations rely on them every day. Let's break it down in the simplest way possible. 1. What is an offshore company? An offshore company is simply a business registered in a country different from where the owner lives or operates. But here's the key. It is usually registered in a country where the taxes are very low, sometimes close to zero. These places are known as offshore jurisdictions. Cayman Islands, British Virgin Islands, Panama, Bermuda, Cyprus, Luxembourg, Singapore, Hong Kong, Dubai, UAE. Why these countries? Because they offer the same benefits. Low or zero corporate taxes, financial privacy, light regulations, fast business setup. In simple words, you can earn money in one country but pay taxes in another, where it's cheaper. 2. Why do companies use offshores? There are 4 major reasons, and none of them are hard to understand. 1. Lower taxes. This is the main reason. If a company makes $1 billion in profit in the U.S., it may pay 21% in corporate tax. In Ireland, 12.5%. In the Cayman Islands, 0%. That difference can save hundreds of millions of dollars. That's why Apple, Google, Amazon, Nike, McDonald's, Meta, Starbucks, almost every global brand uses offshore structures. 2. Protecting assets. In many countries, lawsuits are common. If someone sues you or claims money from you, assets stored offshore are harder to seize. It's not about hiding, it's about legal protection. 3. Easier international business. If a company works across many countries, an offshore location simplifies. Global payments, currency conversions, international contracts, money transfers. Some offshore jurisdictions have no strict currency controls, meaning you can move money freely. 4. Privacy. Many offshore countries do not publish the names of company owners. So instead of owned by John Smith, it becomes owned by XYZ Global Holdings Limited. Same owner, just more privacy. 3. How offshore structures actually work, step by step. Let's imagine a simple example. You own a big tech company in the United States. Step 1. You register an offshore company. You choose Ireland, the Cayman Islands, or another low-tax country. It's legal, fast, and cheap. Step 2. You transfer intellectual property to that offshore. This is the secret behind most tax strategies. The offshore company becomes the owner of the brand name, logos, software, patents, trademarks, licensing rights. These are incredibly valuable assets. Step 3. Your American company pays your offshore company. Every time the U.S. branch sells a product, it pays royalties to the offshore company for using the brand, logo, or software. These royalty payments reduce profit in the U.S. and increase profit in the offshore, where taxes are much lower. Step 4. Most of the profit accumulates offshore. Instead of paying 21% in the U.S., the company pays maybe 2% in Ireland or 0% in the Caymans. Step 5. Money is reinvested globally. The offshore company can now buy real estate, factories, stocks, startups, ships, aircraft, crypto, or even loan money back to the main company, all legally. This is the basic mechanism used by the world's largest corporations. 4. Is this legal? Yes, when done properly. Offshores follow laws written by governments. Countries create offshore policies because it attracts foreign business, investments, jobs, lawyers, accountants, bankers. Companies don't hide money. They simply choose the most favorable tax laws. It's like using airline miles, discount coupons, or legal loopholes in the parking rules. If the system allows it, people will use it. Illegal activity begins only when someone hides income from tax authorities. But corporations usually declare everything. They just declare it in the country where it is cheapest. 5. Real examples of corporations using offshores. Apple held over $250 billion offshore in Ireland using a structure known as stateless income. Google, Alphabet, used the famous double Irish plus Dutch sandwich route to move profits through Ireland and the Netherlands to Bermuda. Nike. The Nike swoosh logo is owned by a company in Bermuda. Every Nike product pays royalties to that offshore for the right to use the logo. McDonald's. Their European trademark rights were held in Luxembourg, allowing legal tax minimization. Amazon uses Luxembourg for European operations to reduce taxable profit. Meta, Facebook. These companies are not breaking laws. They are using them effectively. 6. The dark side of offshores. Offshores have advantages, but also risks. Hiding corruption money, tax evasion, illegal, money laundering, hiding assets during divorces or lawsuits, financing crime. 7. The final summary. Simple. An offshore is a company registered in a low-tax country to reduce taxes, protect assets, and simplify international business. Offshores are legal when declared, common in global business, used by most multinational corporations, controversial but extremely effective. They're not secret islands full of criminals. They're just part of the financial architecture of the modern world, and they're here to stay.